Good morning, traders. It is Wednesday, July the 18th. Taking a look at the morning charts, we've got the US dollar index. This is the 4-hour chart. You can see we're zoomed back about 2 months here. Now, looking at the recent price action, just to quickly recap, we had this previous high here that was tested and pierced for a trading session, and last Friday was the do or die if it was, to see if it was going to hold up above it. It eventually broke down later in that morning and ended up closing under it, causing a big rally in equities and a pretty strong move down in the US dollar index. Now, since then, we're still seeing a somewhat of a bullish pattern. It's trying to be a little bit toppy here simply because it is eating through resistance that goes from a previous high and also some resistance way back on the chart. But looking at the price action, it is still holding up in a somewhat bullish pattern. And if you just look at the price here, you can see we've had a nice surge to the upside, a little bit of a correction, another surge to break that high, which sellers eventually stepped in. And you can see the volatility here, these spikes. It's simply we've had the Fed speaking, and we've had some news come out that's caused some pretty strong blips in the market. But overall, just putting a line through that, it's a somewhat controlled pullback. Even though it's volatile, it's still a controlled pullback. And if we just draw some Fibonacci lines on here, we can see that we're actually pulling back to a fairly healthy level, which is a normal level. We're drawing a Fibonacci retracement. You can see here we've got the 382% retracement from the high from the last run. Generally, stocks or any investment will see pull back to the 318 or the 50% or even 618. Anything more than 618, and it starts to avoid the pullback and maybe more of a topping pattern. But you can see here we're only at the 318, which is also sitting right on top of majority of the volume here. So we've got this previous high through we've got a couple pivot highs here, another major pivot high. We had this breakout level right here, which will act as support, a pivot low, and that's right, we're down where we are now. So overall, I pointed this out last week, saying if we didn't break through, then we could see a multi-week kind of pause in the US dollar index, may see it pull back a bit. And that's kind of what it's doing right now. It's pulling back, consolidating through still above some key support levels, has yet to break that and close above the major resistance, but overall it's still holding up in the very upper end of the quadrant here, and it could easily start to run higher at any time. So we're still somewhat bullish on the US dollar index. And overall, looking at the stock market and zooming back on the weekly chart, the market overall looks pretty bearish here, and it looks as though we could have a big move to the downside still. And a lot of times I've pointed this out, that the equities market usually has a way of dragging things out longer than you anticipated. So if you think a move is going to happen, this week or next week, sometimes it can drag out to be even a month or two down the road, and it'll have a lot of bumpy price action to shake you out of that idea by the time it happens. So overall, I still feel as though the US dollar wants to go higher here. It's holding up extremely well in the upper end of this zone, and I do think possibly even later this week or the beginning of next week we get a good shorting opportunity in the equities market, and we might actually see the US dollar work its way and start to get some upward momentum and break out of this level here. Because just looking at it, you can see we've got more or less price coming down, came up, just pierced resistance. Now it could form a cup and a handle pattern, which is a very strong basing pattern. Once it's moved up to a resistance level, it has this pullback, forms a base up at this major resistance zone, and then from here we could see it chop around and eventually start to go much higher to the upside, which would bring us, just looking at the size of this pattern here, looks as though we could possibly move 1, 2, 3 full dollars up on the US dollar index, which brings us right to our original target of around 87, 88 for the US dollar index, which means the equities market will have a major leg to the downside still. So that's kind of my thinking for the US dollar index. It's still holding up. It's a little toppy here, pointed that out, but overall it's still holding up fairly nicely, and I do feel as though if it can hold this level and hold the 50% level, then I think we could see it continue to go higher in the coming weeks. possibly even sooner, but overall this is a fairly large pattern and it could take another week or two before it starts to really pick up momentum to the upside. Now you can see here, if we just zoom in a little bit, we see we got a gap up on the US dollar index, and it's moving up again this morning. Again, we've got the Fed Bernanke speaking at 10 o'clock today, which is what happened here yesterday. You had this great big spike. Anyways, we'll see what happens today. He's speaking at 10 a.m. Eastern time, so we'll probably have some more blip on the radar. But overall, the US dollar is trading higher, and usually that means stocks and commodities are trading lower, which they are this morning. So let's take a quick look at the energy commodities. Here's the crude oil chart. You can see we're trading up at some key resistance. Let me just zoom out a little bit here. You can see we're trading key resistance across here, traded right up there yesterday. It's kind of had a little bit of consolidation. Overall, we've seen price move up into resistance, and volume has somewhat kind of tapered off. Had a little bit of a selling spike there yesterday as it came up and pierced resistance. Overall, it's still somewhat of a healthy pattern, but I do feel as though it's going to want to either pop above this level and consolidate for a bit and form a little bit of a bull flag, or it's going to pull back a bit here and consolidate and possibly take another run at that level at a later time. Overall, it's had a pretty nice move up, but it could easily drop fairly sharply just because it's had two bounces. It's at resistance, lighter volume, and I just don't like the setup right at this time, especially with the US dollar trading down at support and just starting to bounce. Zooming in a little bit, crude oil is an overnight trading. We're trading down just a little bit, down about 1/3%, not much. You can see it's just kind of flagging up here, and we've got crude oil inventories coming out this morning also, so that's going to cause a blip on the crude oil. So prepare to be shaken up a bit when that comes out. I think that inventory is out at 10:30 this morning. Looking at natural gas, here's the 4-hour chart of natural gas. We continue to consolidate up at this resistance line, forming more or less a pennant formation or a bull flag, depending on how you want to draw it and how you see it. Everybody sees the market in a bit different way. You could even, anyways, we've had this nice run up. The more it consolidates here, the more bullish it becomes, and we'll see how things kind of play out in the next little bit. Overall, you could also draw a bull flag kind of forming that way, and it could continue to work in this channel. We'll see how things play out. Overall, natural gas, very volatile. If you do get involved, make sure you take a very small position because it moves 2-5% a day. So you got to be very cautious, but overall it is holding up fairly nicely. We still have elevated volume spikes showing the bulls and bears are struggling up here. They're really kind of going blow for blow, and usually I try not to get involved when that's happening because you really want to see volume start to thin out and dry up, meaning that there isn't as much of a fight anymore, and eventually when it does pick up, it should continue the trend that it's in, which the current trend is up and it's consolidating with some profit taking, and we want to see that trend continue. But we want to see some of these volume spikes start to wear down a bit. Looking at precious metals, here is the 4-hour chart of gold. We're trading slightly lower this morning, down around almost 2/3%. Silver's down 1%. You can just see we had this little bearish pattern I pointed out yesterday morning. Kind of prices kind of ran up, had a little bit of a pullback, and then we just kind of had this rising flag. Usually you don't want to see a flag rising if you want higher prices. Rising flag is generally a bear flag, and more or less we've got that sell-off yesterday, sharp dip in the morning, continue to bleed off here this morning, and it's heading lower. Looking at the daily chart of the gold, you can see though we're coming to a pretty major crossroads. Zooming way back in time, pretty major support level cross here. Overall, we've had a nice long run to the upside. It's had a very long consolidation. Overall, this pattern here, the last about fifth of this pattern, 10th of this pattern, is somewhat bearish. It looks as though it still wants to break and go to the downside, really kind of shake the market out. But overall, if it breaks clearly above the upper resistance trend line, then we could see a huge move to the upside and see gold break into the 2000s and continue to run. We need a lot to happen for that, but overall we will have some pretty key resistance levels along the way. If it can break to the upside, 1800 would be a major pivot high. We've got a couple pivots right across that level which will act as resistance. Of course, we've got a little bit of a double top here up around 1900. And then, of course, if they can break those, we could see it really go screaming into the 2000s. This is a very large pattern. There's been a lot of consolidation. A lot of gold shares have and contracts have changed hands. So all those who made money in a big run up, they're mostly were shaken out, taking money off the table. So all the new owners here that own gold at this level, they're ready for a strong run to the upside, anticipating a move into the 2000s. And again, that the fact that there's fresh shares through this consolidation means it makes it easier for it to make another major move to the upside that could last a year or longer, depending on how it runs. So got our eye on that pattern. Of course, a breakdown could be pretty major. We could see a sharp drop down to the 1450, even 1400 level. Naturally, it'll want to come down to the next key support zone, which will be across these tops, and then of course this breakout level acted as support. Come across probably right about to that level will be the support zone if it does break to the downside. So we're keeping our eye on it. It's getting squished into the apex. It has to break one way or the other eventually, and once it does, then we're going to see traders get involved, and we'll be probably jumping on the bandwagon. Looking at the gold miners ETF, this is the 4-hour chart. Pointed out yesterday how I didn't really like that pattern too much, how it kind of came up and kind of leaned over here, and then we had this gap down and another one. Overall, I pointed out it looked like it would probably go lower. Yesterday we saw a pretty sharp drop in it, and it's consolidating this morning. From the looks of it, we're going to see a gap lower again this morning and possibly continue to move down, something similar to this, where we'll see another quick drop, and then from there we'll probably see some type of rebound in the coming days. Hopefully we'll just see how that kind of plays out, but we've got a double bottom possibly in here for GDX in the near term. Looking at the silver chart, 4-hour chart of silver doesn't really show you a whole lot of price action. We'll just jump to the daily chart, just kind of show you the big picture here. Big picture very similar to gold. We've got a pretty key support zone we've just been flirting with here the last little bit. We got this falling down trend line, of course, big pattern running up, and now we're consolidating it. This pattern here, we're seeing stair-stepping price down, little bear flags, another bear flag. Looks as though we could end up continuing to squeeze a little lower, and of course if we do, it's going to shake out a few more people, and we could actually see a pretty strong move to the upside if it does go there. A lot of times these patterns, they actually drop off right at the end, really kind of shake everybody out, and then you'll see them reverse very strong. Same with gold. So it's gonna be a tough play here to see how things unfold, but overall more or less we're looking for a breakout to the upside. That's where I think we're going to see some of the biggest potential, but we could see the market shake things up a little bit in the meanwhile. Looking at bonds, this is a 4-hour chart of bonds. They started to get a little choppy the last couple of days, came up, tested this high here for a double top. We've seen sellers step in, and it continues to move lower. It's actually trading up this morning. Yesterday it closed down near the lows. We're having a little bit of a bounce up. We are at resistance. If we just zoom in on this chart a little bit, you can clearly see where we're trading here. We're trading at this key moving average, and we're also right back into the middle of all this consolidation through here. So it kind of broke down, and now it's come up and it's hit its head on the average price, going straight through there. So we'll see how things play out today. If the stock market starts to slide this week or next week, we're going to see this continue to move up, and this will have just been more or less a little consolidation, a dip, breaking at least one little pivot low to kind of run the stops and rejuvenate bonds for another run to the upside. So that's kind of what's unfolding there. Looking at the SP 500, I threw my the cycles on here, and so we've got the SP 500 daily chart down below. Now this is where we traded. We took a short position right here a couple weeks ago. Caught this nice downdraft. We squeezed out a few percent out of there. Overall, you can see here I've got these different cycle lengthwise cycles on top here. More or less what we're looking for are clusters near the top. So in a downtrend, which we were coming down here, you're generally looking for a couple cycles to top at the same time. Usually once they top out, you usually have about 2 to 3 days, and when they start to move down, that's when you'll start to see the market have a wave down. And then once you switch, once we did break into an uptrend here, once you have a nice strong surge to the upside, instead of the market pulling back, once these top out, you'll actually just see it consolidate. And if they don't pull back, then obviously you've got a bull flag forming, and it went into another run. We had them top out here, and then 3 days later we saw the market pull back fairly sharply. Eventually we saw another run up here. They topped out, and then 3 days later we saw them start to pull back, and we took that short position right here. Of course, we were at a couple key resistance levels. We had this new trend line, resistance trend line drawn in because we had 2 points. We also had a downward trend line from the previous top, and everything lined up with the cycle. So we took the short position and we caught the nice downdraft. Now we're starting to come back up. Overall, we are coming into resistance. We've got a downtrend line right here again, the same one that stopped the market last time. We're also coming into this previous top cluster here, which is going to act as horizontal resistance. There's a lot of shares that traded up in these 3 trading sessions, and getting back up there, we're going to see sellers, all the people who held on to their losing positions down here, who were long. Once it gets back up there, to break even, they're going to get out. So there's going to be all the sellers from these 3 or 4 trading sessions unloading up here. Not to mention it is a resistance level. And as we have seen the equities market start to top out here, and usually we'll see it kind of play out for another 1 to 3 days, and we'll see things start to kind of get a little choppy. We could even see a big gap to the upside and a big red candle, and then eventually possibly see it really start to bleed off here as we break a key support zone. We're going to have key support right across here. If we break that level, then we're going to see probably a very strong move to the downside, and the US dollar will continue to move higher. Looking at the SP 500 futures, you can see where we're trading at this morning. You can see we had that the rally on, this is last Thursday, and then Friday we had that huge move to the upside. Yesterday we had Ben Bernanke come out and speak, and he caused this huge blip on the charts, really breaking a previous low. So anybody who was long most likely got stopped out on that strong sell-off in the morning, and by the time everybody figured out what he was kind of talking about, with possible QE3 on the table, then everybody piled right back in again. So all these people that saw this kind of selling started to short on the way up, eventually broke the morning's high, and they would have got stopped out later in the afternoon. Since then, we've seen market pullback in overnight trading. We're down about 1/3% at this time, and overall the market is still holding up. If you look at the overall market, we've seen a nice move up, pause, move up, pause. We had a little bit of a choppy sideways consolidation session there the other day. A little bit of a move up. We had this blip on news, but you got to remember this is news. Usually any blip on news, a big move to the downside or straight down or straight up, is usually given right back, which it was yesterday. Anyways, looking at it, we had a dip and it got bought back up, and we're seeing another consolidation. So I do feel as though we could continue to squeeze a little higher here still in the next 1 to 3 days as the market tries to top out, the cycles start to top out, and then from there we could see a pretty strong move back down. So that's kind of where we stand right now, and the market's a little overbought. We're up at resistance, trend line up at resistance with horizontal resistance from previous high, so we are starting to get a little lofty. The key here is we want to start to see volume dry up. So if we just zoom out to the last price action here, you can see we saw prices really pick up to the upside. And if you notice, once we got up into this resistance level and the cycle started to top out, we started to see volume drop off very sharply, and that's what we're looking for now. We're starting to look for a bit of a drift higher. Excuse me, a bit of a drift higher. We want to see volume start to really kind of taper off. We want to see fairly light volume today, other than Ben Bernanke speaking again, so it is going to cause some volume, and there's going to be a lot of traders trading around it, which in my opinion is very dangerous. But whenever there's news and Bernanke speaking, a lot of traders seem to flock towards it and try and trade it, which this kind of stuff is very dangerous to trade around unless you're a really good scalper. And even then, it moves so fast, you got to be cautious. Overall, we're waiting for the market to kind of come up here and stall out. We're coming into upper resistance up into this level. We got this kind of resistance zone for it to play in over the next day or two. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.